Good morning, investors. You are now with me, Ainunjaria, on KleverStock, running through all the morning bell updates. Kicking it off with the stock market update. Bursa Malaysia opened higher on Tuesday, extending the previous day's gains on continued institutional buying and stock accumulation. At 9:05 a.m., the benchmark FBM KLCI edged up 1.31 points to 1,586.90 from Monday's close of 1,585.59. The index opened 1.39 points firmer at 1,586.98. The market breadth was positive with 146 gainers outpacing 88 decliners, while 65.82 million shares worth 40.74 million ringgit changed hands. Now moving on to the local currency update. The ringgit opened stronger against the US dollar on Tuesday, extending gains as the greenback weakened on rising expectations of United States interest rate cuts. At 8 a.m., the local currency stood at 4.2070 or 4.2275 versus the dollar, up from Monday's close of 4.2165 or 4.2205. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the US dollar index DXY continued to fall as market priced in a possible Federal Reserve rate cut next week following softer US jobs data. He said economists would be watching the quarterly census of employment and wages due from the U.S. Bureau of Labor Statistics later today, amid expectations of a downward revision in job growth. He said the key message is that the labor market is weak and the Fed is seen as behind the curve in cutting interest rates. Back home, Muhammad Afzal Nizam said the ringgit was likely to maintain its appreciating bias and hover around 4.21 to 4.22 per dollar. The ringgit, however, was marginally lower against major currencies in early trade. It eased to 2.8545 or 2.8686 against the yen, slipped to 5.7009 or 5.7287 against the pound, and fell to 4.9508 or 4.9749 against euro. Against ASEAN currencies, the ringgit traded mostly firmer. It rose to 257.9 or 259.3 against the rupiah, strengthened to 3.2795 or 3.2958 versus the Singapore dollar, and edged up to 7.42 or 7.46 against the peso. It slipped, however, to 13.2734 or 13.3452 against the baht. Continuing with some foreign economy news. Oil prices gained on Tuesday after OPEC Plus decided to increase production by less than what market participants had anticipated, while concerns over tighter supply due to potential new sanctions on Russia continue to lend support. Brent crude gained 22 cents or 0.33% to $66.24 a barrel by 0.05 GMT, while U.S. West Texas Intermediate crude climbed 24 cents or 0.39% to $62.50 a barrel. 8 members of the Organization of the Petroleum Exporting Countries and Allies, collectively known as OPEC Plus, agreed on Sunday to raise production from October by 137,000 per barrels per day. That is much lower than the monthly increases of about 555,000 BPD for September and August and 411,000 BPD in July and June. It is also less than some analysts had expected. Now, Daniel Hines, a senior commodity strategist at ANZ, said October move marks the reversal of cuts that were set to remain in place until the end of 2026, following the rapid return of the previous tranche of idled barrels over recent months. Prices were also supported by speculations of more sanctions on Russia after the country's biggest air attack on Ukraine set fire to a government building in Kyiv. Now, U.S. President Donald Trump said he was ready to move to a second phase of restrictions. The European Union's top sanctions official was in Washington with a team of experts to discuss what would be the first coordinated transatlantic measures against Russia since Trump returned to office. The further sanctions on Russia would diminish its oil supply to global markets, which could support higher oil prices. The U.S. Federal Reserve's Federal Open Market Committee meets next week, and traders see an 89.4% chance of a quarter-point interest rate cut. Lower rates reduce consumer borrowing costs and can boost economic growth and demand for oil. And now moving on to the corporate news update. Malaysian Resources Corp Berhad, or MRCB, is acquiring the Employees Provident Fund's EPF 80% stake in Bukit Jalil Central Properties in Berhad, BJSP, for 1.58 billion ringgit in cash. Now, this allows MRCB to gain full control of the strategic 30.82 hectare Bukit Jalil Central development. The BJSP was established to undertake the Bukit Jalil Central project, which has a projected gross development value of 21 billion ringgit. The MRCB said the acquisition comes as it re-evaluates the mixed development plan approved in November 2020. And finally, with Bursa Malaysia, MRCB said discussions with the EPF on revising the original master plan were unsuccessful, prompting the company to proceed with the buyout. The 30.82 hectares site is located 1.9 kilometers from the Malaysian Research Accelerator for Technology and Innovation Park, and MRCB sees the land as a potential hub for hyperscale data centers. However, the company clarified that feasibility and environmental impact assessments will be conducted before making any firm development decision. BJSP owns 3 parcels of land, a 97,720 square meter recreational park, and 2 vacant parcels measuring 37,320 square meters and 173,800 square meters respectively. The transaction is being executed via Rukun Juang Senjata Berhad, a wholly owned subsidiary of MRCB, which is acquiring the stake from Tanjung Wibawa Senjata Berhad, a subsidiary of the EPF. The deal includes 1.13 billion Class A preference shares, which carry dividend priority and preferential rights upon liquidation. With this acquisition, MRCB gains full ownership of the 2.06 billion ringgit land and project, while EPF exits its investment. The transaction is classified as a related party transaction, and EPF holds a 36% stake in MRCB. The agreed purchase price of 1.58 billion ringgit was derived based on BJSP's net asset value of 1.4 billion ringgit and the market value of the underlying land. The EPF's original investment in BJSP stood at 1.14 billion ringgit. Now, post-acquisition, MRCB's net gearing is expected to increase from 0.2 times to 0.6 times based on its most recent audited financials. The deal is also expected to add 2.37 cents per share to its pro forma earnings. The acquisition is subject to shareholder approval. Investment Bank Berhad is the principal advisor for the acquisition. And finally, wrapping up with more corporate developments and deals across Malaysia. Gamuda Berhad and Samsung C&T Corporation have been selected by the Australian government as a preferred contractor for the last major contract in Stage 1 of the Mariners Link. Malaysian Resources Corporation Berhad is acquiring the Employees Provident Fund's 80% stake in Bukit Jalil Central Properties in Berhad for 1.6 billion ringgit in cash. Lionsden Fleet Group Berhad is disposing its offshore support vessel Icon Samudra for 28.1 million ringgit to Vietnam-based Asia Investment and Asset Management Joint Stock Company. And next, Econ Pile Holdings Berhad has secured a 54 million ringgit subcontract from Gamuda Berhad in relation to the LRT Mutiara Link project in Penang. And last but not least, OCK Group Berhad plans to list its power solutions subsidiary EI Power Berhad on the East market of Bursa, Malaysia. Now that's a wrap. For more development updates with me, Ainun Jaria on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.